Yeah, welcome to the Nifty daily view for 8th May 2015. We'll be discussing on various time frames and on Sensex chart as well. So let's first pick up the daily chart of Nifty. So what you see is a doji pattern here that has been formed today, which needs to be confirmed tomorrow with a bullish candlestick pattern. Like if you see in last times, in December there was one doji pattern, then there was one bullish candlestick pattern. Then in January also, if you see, the bottom was made by a doji and then a bullish candlestick pattern. So both here and here, let's look. It is looking similar, and it also is on the. If you join these two highs, very important highs, and if you make a channel out of this green channel, so they tested the lower end of the channel. So in short term, it seems that bottom has been formed, and this could take Nifty to another 150-200 points at least if we start sustaining above today's high of 8122. Okay, and this was blue line was the previous support, which did not work as Nifty closed below it yesterday, and though it will add some significance. Why? Because today's high is just at the trend line. But the green channel is the most significant one. So what we can say is rally up to 8250 to 8300 is possible in next few sessions if we sustain or preferably close above today's high. So this will be the condition, and you can get a 150-200 points rally. On a broader picture, if you see, this was extreme short term. So if you see on Nifty hourly chart as well, so Nifty made this hammer right at the support, so you can very well expect it to go to 82540. So we are expecting it to rally here if it crosses today's high. So that is the extreme short term view. Okay, so for long term view, medium term view, this is like, let's keep it here. Now let's talk about some retracement. Now we can calculate retracement from two lows. So if we calculate retracement from the low of 2013 August, so we get this green line. So green line is the 38.2 retracement, which is around 7600. Yeah, it is around 7600. Yeah. So green line is 32.2% retracement from A to B. So this is 31. If we shift our lows from the recent from the February 2014 lows, then this 50% of it is coming from, like, this was A to B. B point is same for both the retracement. So this is, let's suppose, X. So 50% is the red line, which is from X to here, X to B. So this is what I wanted to indicate. Like this 7500 to 7600 will act as a very important support, because the two retracements are from the both A to B and X to B are coming at this point. So this is going to be a very important support going forward. Okay, so one more thing I wanted to share on this falling channel. See, typically falling channels are very difficult to break. Why? Because the line itself is going down, so it will be very difficult to break. See, I'll show you. So like this is what you say is the falling channel. So what will happen is there can be two cases. If it breaks, gives a false breakdown. Why? Because it is already falling and you want it to be breakdown, or what happens, it will consolidate here and then give a sharp fall. So this could be possible, sharp fall till maybe 76, 7500, whatever that level is to be seen. But if it is not able to cross the previous, this is the falling channel like theory, or it goes up again to the channel, so that is 8700. So that we have to see that if 8300, the high on that was made on, I think, Tuesday, Tuesday. So the high formed on Tuesday is the 8355. If it is not crossed, okay, if it is crossed, then the clear sign it would be that Nifty should be headed to 86, 8700. Then that would be a total bullish probability. If it is not able to cross the previous swing high, okay, then this chance is possible. This this could be the probable move that can happen in Nifty in the next few days. So watch out for this 8350. First is this point, like we are having, and 8355 is crucial resistance, and till it is not crossed, it remains a sell on rise market for the bears, because for bears the previous swing high has to be crossed. So 8355 just market is a crucial resistance. You will get a bounce back to 8250, 8300. That is possible in near future. And if you see long-term supports rise at 75 to 7600. Now I would like to show a chart of Sensex also. Now Sensex is why it is pretty more clearer than Nifty, because if we draw this line, it does not become a head and shoulder, clear head and shoulder pattern. Normally it is said that head and shoulder pattern fails most of the time, 75 to 80% time. But if you see, I don't think so why this head and shoulder pattern should fail. Why? Because in like in weeks or months to come, why? Because it has retested the neckline. So if you see, if you join it is a clear head and shoulder pattern. If you join the lows of this October and December and all these lows, so this is a shoulder, this is a head, this is a shoulder. So I have marked this in other colors. So head is blue, so the head target is around 24,500, and this is orange shoulder, the left shoulder, which is target around 25,000, and this is the shoulder which the target should be around 25,800. So all this comes around, if you compare both the Nifty and Sensex, so all this should come around 75, 7600 only. I don't think so. 75 to 7800. So 7800 is the minimum target of the right shoulder. So this is the long-term support. Plus, it coincides with this Fibonacci retracement view also. That both the Fibonacci retracements from either A to B and or X to B lies between 75 to 7600. So for long-term, please deploy your cash between 75 to 7800, and you will get good returns. In short term, what we expect is 8250 to 8300, which could be possible in next few sessions. And if 8355 is again failed to cross previous swing high, we can again see a downside, which could be like this. Why? Because normally falling channels are broken like this in this fashion. If it has to rally, then this is a major bottom. Then you might see 8355 crossed and rally to 8650, 8700 should start, and what it was looking as a head and shoulder pattern will convert into a falling channel. So if you see, if this is a head and shoulder, like let's suppose a vague line here, so if this is crossed, 8355 or the previous swing high is crossed and Nifty reaches around 865, so this will become a falling channel, and this can have bullish probabilities of 9400 or something like around those. So that is not in question right now. First we have to take step by step rally to 8250, 8300, cross the previous swing high, then we'll think about it. So this is the current scenario on Nifty, and thank you.